If you start to see rates come down too fast, you're going to see house prices skyrocket again. It's not necessarily what anybody wants, I don't think, in the game.
Yeah.
What's up, guys, and welcome to another episode of the Vacation Rental Revolution podcast. I'm your host, Shawn, and I'm here with my main man, Dave Sivulich, for Whisky Wednesday, where we're going to talk about some things going on in our lives on the personal side, some fun things happening, and then also some trending topics inside of the short-term rental world, as well as some questions that you guys have sent in and submitted. If you're new to Whisky Wednesdays or new to the Vacation Rental Revolution podcast, you guys have the ability to send us in your questions about short-term rentals, some of the challenges, some of the sticking points, even comments that you have, success stories to share. Send them in to us. We want to talk about them on these episodes. And so, Dave, we were talking about before camera. I said, hey, this better not be a flat episode. And if it's bad, it's Dave's fault because he doesn't ask good questions. If it's really good, I'll take the credit for it. So
I was thinking that this is going to be one of our best episodes. I just have a feeling.
Hey, just so you know, I like that shirt. Dave was saying, hey, if we gain a whole bunch of followers from our female listeners, it's because of the shirt he put up today. So
that's what I'm talking about.
I'm hoping that's the case. So
let's talk. So we're coming up on fall. It's getting a little chilly around here in Utah.
I got the sweaters on. I got the felt hat instead of my straw hat.
Yeah, you got to keep your head warm.
Seasons are changing.
So, we start to feel the cool air. The leaves starting to fall. We got Halloween coming in a couple of weeks. So let's just talk. Like, are you a fan of Halloween? Do you like Halloween? Do you like costumes? Do you like all that?
I like costumes.
Any traditions?
I mean, Teresa and the kids, that is their favorite holiday. And
That's awesome.
October is a pretty fun month around our house. They love dressing up. They love going all out on a theme. We always do like a family themed costume. And so I'm actually not sure what it is every single year.
You just come home and say, hey, Dad, this is what you're wearing this year.
This is how serious they are about it. They're already talking about next year Halloween.
Because they already got this year dialed in.
And they dial it in a year in advance.
Okay.
I mean, it's like, so we'll see what
and as kids and your kids and family get older, you used to have, big parties and costume parties and all that kind of stuff. But that's
Halloween's kind of fun. You get to vicariously have another personality, outfit, everything for a day. And, sometimes they're a little wild and crazy and, kind of fun.
So I love it. I don't know. There's something about the feel of Halloween. It's kind of fun. It's cozy. You have the hot apple cider. My wife makes homemade chili. We roast
Is it spiced?
It's not
apple
really
spiced.
no, just that.
So it's not as fun as my Halloween.
It's not as fun.
Okay.
No.
All right.
But we do more traditional stuff. Like we do the pumpkin seeds and we roast those and we do some of that stuff. And we don't do a whole lot of costumes, but we do in the neighborhood get together for a big kind of get together and roast hot dogs.
You guys
and
don't
have a
dress
fire
up?
and stuff. We did for a long time there when our kids were little.
You guys need to dress up.
But
I'm not. I get
I put a mask on.
I get stressed about it, to be honest. But it is kind of fun.
Yeah.
It is fun. Our neighborhood goes all out. Like you got the headless horsemen driving around. They shut down the streets.
Oh, that's awesome.
So it's kind of fun. Yeah. It's a big event. So if you don't dress up in my neighborhood, you're looking out of it. You're kind of that guy. Yeah. And so just so you know, I mean.
Hey, okay. Let's ask this little question of the day on Halloween. What do you give out? What kind of candy do you give out?
We don't. I wouldn't say anything super exciting. We always do the candy bars, right? But it's like
full candy bars or just little guys or what? I mean,
it depends on the year. If I'm having a good year, maybe I can do full. If I'm struggling a little bit, then I might do the small ones.
I mean, as a kid,
every year we do a little different, but mostly it's just the candy bar, like the mixed candy bar stuff, the kind of that everybody does. We have some of those neighbors that have the reputation of one of them does the candy apples, and some of them do they have this big toy bin that kids go get toys. Yeah. Some of them do the full candy bars. I mean, and so everybody has kind of their thing. We don't really have our thing as far as that. I guess I got to step that up.
Well, I think we don't really. You kind of notice if you're not keeping up with the kids, they're like, oh, sweet, thanks for the Jolly Rancher, or you're giving something big.
Hey, I will say, I love Smarties. Smarties are one of my favorite candies. Always have been. I don't know when the last time I had a Smartie was.
One full Smartie?
A Smartie. And I still told Teresa, let's get it back, Smarties. And she about smacked me right in the middle of the aisle at the store. And she said, no, we are not giving away one thing of Smarties. So we do go a little bit more than that. Yeah. But hey, listen.
I know.
I like
it's expensive, though. When I was a kid, they weren't coming into the full candy bars back then. It was the traditional stuff, the bags of popcorn and, all that kind of stuff. Well, there was a house that was pretty good hike away from ours. And it was Browning Arms, Browning, the guns and, hunting outdoors type of thing.
It's in my backyard.
Yeah.
Right there.
Well, the owner or the founder lived up by us and we hiked up there, but literally he gave king size candy bars. So if we could get to that house, we knew that was going to be successful.
When we were 8, we weren't smart enough to realize that if we just went to 3 houses that were giving away the regular Kit Kats, it was the same as a king size. So it was fine, right?
So we walked it a mile to get to the king size.
And waited for an hour in line. Because those houses always have a line, right?
Anyways, so that's awesome. Halloween. We also, fall is the time to get out and do some hunting, get out and see the fall colors. Beautiful here in Utah.
Yeah, so we always start our fall season with our Alaska trip, which we talked about in a previous episode. And then we've got hunting season and we've got Halloween. Yeah. Fall's a fun time of year.
I love the change of the weather and the seasons here in Utah. It's so hot and we're ready for a change, and it's kind of nice. You can feel that change in the air. So it's good. Maybe we can post a few photos on Instagram of the family outfits.
See. Sometimes
depending on what they get.
Sometimes they're not appropriate.
I could see you in
what's going on Instagram.
Zeus or Hercules or
I appreciate you saying that. That's why you're my right hand guy. Because that's how you can see me as that. I appreciate
maybe
that.
The Rock. I don't know. I'm just thinking of all the people that I can see you being.
All right, The Rock. There we go.
All right. Well, let's move on to a trending topic. So,
all right.
Yesterday, as some of our followers know, maybe they don't know, but as a part of Odyssey, we have an amazing coaching program, and we have weekly calls. And one of our weekly calls is Shawn's AMA call, Ask Me Anything call on Tuesdays. So every Tuesday, you get on the call with our members and stay on for 2 or 3 hours, as long as it takes, and you'll answer any question about the market, about their listing. You'll pull up photos. You'll talk about whatever they want. I think it's an amazing resource. Yesterday's call was really focused on most every question. Typically on the Q&A call, they ask an array of questions, but it was kind of focused yesterday on the market, on, hey, what do you think about interest rates? And what do you think about market and inflation? And everything was kind of dialed in on what do you think and where it's going? I mean, I think people are a little bit concerned, or maybe that's just forefront in their mind about, oh boy, should I get into this industry? Should I get into this market? And what's it look like?
Yeah, that seemed to be kind of the trending topic yesterday within our investment group, in the Odyssey family in our Empire Club. And it was really a couple different questions around that. And if we're going to dissect the market, it's important to really dissect a few different major parts of it, right? One was, how are we still bullish on the real estate values? Do we still think real estate values, because inside of our group, my members know that I'm buying properties right now, that we're making offers, that we're aggressively looking in acquisition phase. And they're saying, well, can you talk about that? Can you say, why are you so bullish on it? And I'm talking about single family homes particularly. We talked about this on another episode that I was saying, why I love single family homes, particularly within real estate. I love real estate in general. Right. I think all lanes of real estate have pros and cons. I like single family homes, and short-term rentals allow us to buy some of the nicest single family homes in the nicest areas and still make money with it. And so I love that. In general, the market, as far as the real estate market in the US, there's still a huge supply and demand gap. Supply is still super low. Interest rates have put some downward pressure on demand, but not enough downward pressure on, and when the equal amount of downward pressure they put on demand, they've also put equal pressure on inventory levels. Right, the supply. Supply. It's had this effect on supply that nobody's trading up. Nobody's putting their homes on the market because they don't want to sell their home that has a 3% or 4% interest rate and go trade up and buy something at 7.5% or 8%. You've got this supply that continues to go down. Inventory levels are at all-time lows. In real estate, especially single family homes, that's a fairly simple economics as far as prices are concerned, going up and going down. When supply is so low and demand is still, it's gone down, but it's still, that gap between supply and demand is so wide. I just don't see house prices on single family going down. And we're in a weird time in the economy. I've heard you had the Great Depression, you had the dot-com burst, you had the Great Recession in 2008, and they're kind of calling this kind of the silent depression a little bit. I've heard that term coined by somebody, I don't know who called it, but it makes sense to me of what's going on. It's really a weird kind of economy where the economy is still showing really strong. You know, the American consumer is being very, very resilient, spending a lot of money still. People are still buying homes, even though that they're not buying as many as they were. But a lot of the stats you hear about single family home sales being down is a reflection of there's nothing available.
Nobody's selling their home right now. Yeah.
Prices are not dropping across the board, right? We're seeing across the board on average, we're still seeing average appreciation in that 5% range across the board in the US. And real estate's very localized and regionalized, where you've got some areas, and we invest in some of the nicer areas and nicer properties. I always believe in buying quality assets, which is why I love short-term rentals. It allows me to go buy quality assets. And in those quality asset type of areas, we're even seeing still double-digit appreciation, and which is crazy to when you hear all the chatter that you hear across the board about the economy. So when it comes to home prices dropping, I just don't believe that's going to happen. I don't think interest rates are going to drop significantly anytime soon either. We talked about that. Like, hey, just buy something to refinance. I think you need to underwrite and plan on these higher rates, whatever you lock in at, for the next probably 2 to 3 years. Because where inventory levels are at, there's this huge amount of shadow demand, right? There's a lot of buyers, a lot of sellers sitting on the sideline waiting for something to happen interest rate wise. If rates come down, prices are going to skyrocket because demand is going to go up, and we're going to start to see people starting to trade up again. I don't think that that's necessarily the most responsible thing for the economy either. Housing affordability is getting tough, right? Houses have gotten really, really expensive. Affordability is tough.
Think of that. If my kids' age, they're thinking about buying a home in the near future, you think, man, how are they going to do that? How are they going to make that happen?
And it is a concern. And so I don't think that the Fed or whoever's making all these decisions on raising the interest rates or lowering the interest rates, if you start to see rates come down too fast, you're going to see house prices skyrocket again. It's not necessarily what anybody wants, I don't think, in the game. I like having a portfolio that goes up in value. There's no question about that, which is why I'm trying to buy right now, because I'm not competing with a lot of people. It's a very interesting time. Statistically, on paper, a seller's market, right? There's not enough inventory. There's less than 6 months of inventory in most markets across the US. Houses are still selling in a pretty reasonable amount of time. They're not selling in days. They're selling in, a month or less than 2 months. On average time on the market, I think, is just creeped over a month now. That's still a seller's market. However, we got so used to the opposite market that we feel like sellers feel like it's a buyer's market. So take advantage of that as a buyer, be able to negotiate, be able to look at for better terms, be able to get some buy downs on your rates. All those things are available to you, which is kind of crazy when it is still statistically speaking a seller's market, but nobody feels like that emotionally. And so as a buyer, I want to take advantage of that, but also be able to underwrite the deal and make sure that I can cover those higher payments, because I can't plan on, and you shouldn't plan on, underwriting a deal and saying, well, I'm going to just refinance in 6 months and I'm going to stomach it for 6 months, because you don't know. You might be stomaching it for 2 or 3 years, because I don't think that they want to just drop rates really significantly, because you're going to see prices shoot through the roof, and it's going to be a frenzy again, like we saw. And I don't think anybody really wants that. I think that's good.
And it all comes back to, I appreciate, and I think it's the right thing to do as a investor and as a consumer, to have those things in mind and to really dive in to make sure it's the right thing in the right time. But it all comes back to, there's always great properties as long as you do the data and understand the data and do the worksheets and the analysis. So if it works and the numbers look great, that's a great opportunity. There's a bunch that aren't going to work as well. Be patient, pass on those, and continue to keep looking to make sure it accomplishes the goals of what you want to do.
And I think it's interesting, another question. So we talked, that was kind of talking about the general single family home market in the US, of kind of why I'm still bullish, and I don't think that we're going to see a big price drop across the board. But also on the short-term rental side, somebody was saying, hey, what are we doing different on our underwriting? How are we underwriting these properties differently to be more conservative with what's going on? And my answer to that is, we don't do one thing different. Our underwriting is underwriting. Underwriting is exactly the same. You're going to run the numbers. Now, does higher rates, higher prices, does that affect the ROI and the way that the property is going to underwrite, whether you may or may not buy it? Yes, absolutely. But the underwriting stays the same. You should be always conservatively underwriting properties. You should be underwriting them, understanding all of the numbers. And higher rates and higher holding costs and ownership costs on a property, that's part of the underwriting. That's part of understanding that. The other part of understanding underwriting is what's going on in the short-term rental market. How much money is being spent in the market? One of our members actually said, hey, Shawn, what do you think about this market? It's down 7% across the board. Rates are down 6%. And I said, I'd like to see your numbers, because I've yet to find a market that is down that much. Like it's really, really hard to find.
Right.
And when I say a market is down, I look at the overall money being spent in that market.
Yeah.
Right.
Yeah.
That's my judgment on, is there demand in the market? How much money is being spent, and is it going up or going down year over year? A lot of people report on RevPAR, and we always hear that, or the average, the median income that a property makes in that in the market. Well, that's taken the total money being spent divided by the total number of homes. There's no market in the world that everybody gets their equal share of business, including short-term rentals. So why would you underwrite it that way?
According to that number.
You want to underwrite it by saying, okay, how much money is being spent? What is the range of revenue? Like from high to low, what are people spending on a 3-bedroom property in a certain market? X per night. What is the occupancy in that market? And then calculate out what your revenue potential is. And you have to decide, am I going to be on the high end of that, on the low end of that, somewhere in the middle? Because everybody doesn't make the same amount of business. And it's our job to get our unfair share of that business. I care if money's being spent. Well, what happened in this market? That market was actually up 17% from last year. The total money being spent was up 17% in that market. So consumers are buying. Yet she was under the impression, because she saw that number of RevPAR being down 7%, that it's going down. I'm like, that's not what. And now that's the way I underwrite deals. That doesn't mean that everybody has to underwrite deals that way. But what we're seeing is all indicators are there's still really, really good opportunities. And what I think people forget about is when everything was on fire, right after, like, let's just go back to before or right after COVID, when everything was just, properties were selling in minutes, literally. You were competing with people. They were selling for over ask price.
Prices were way high.
Guess what? There was a lot of properties that didn't underwrite then as well. When you did your underwriting, you still had to underwrite the deal, look at the numbers. And there were a lot of properties that didn't cash flow. There were a lot of properties that you would have said no to, just like there are going to be a lot of properties that don't work right now, but there are properties that do work. And so you have to make sure that you really understand the numbers. It's really dialing back and understanding the numbers.
Good. That's what people want to hear. They want to know. They want to hear the way you do it, your strategy, and really dive in. So good. Well, let's get a couple questions. So this is Ann. Ann said, as we start this journey, should we buy a large or short-term rental for our first property? So
large or small?
Yeah, I'm sorry.
Large or small?
Short. Yeah, large or small. Okay. So, and they've asked, I've heard this a few times. So they always say, do we buy a big one, a 4 or 5 bedroom one, or do we start with like a 1 or 2 bedroom? The
true answer is it does depend. There's a lot of factors that go into what you should and shouldn't buy. There's pros and cons of both of them. Smaller properties, your gross income from them is going to be not quite as much as some of the larger properties. Some of your highest grossing properties are going to be the bigger properties because people are spending more for them, right?
You can charge more.
You're also paying more for them. So you have to look and say, in my market, what is the better return on investment, a large or small? If your capacity to own each of them is the same, you might not have the buying power to go buy the big mansion in an area.
You may be forced to buy a smaller one because you don't have, the savings or the amount of money cash down, all that stuff.
They're going to cost a lot more to furnish. They're going to cost a lot more to set up and create this great experience.
A lot more to clean and things like that people don't think about.
There's a lot higher cost on a large property. You also make more money, but that doesn't always mean that your return on investment's higher. And so I always look at that. There are some markets that your return on investment is going to be much higher on a small property than it is going to be on a larger property. I personally like the 3 bedrooms and less properties because I don't travel with big groups. And so when I build my portfolio, I like to use the properties. I like to buy properties that I like. The other benefit of a small property, 3 bedrooms and under, is you're going to fill in the shoulder seasons. You're going to fill in those last minute bookings a lot easier than you will on a 7 or 8 bedroom property. Because people aren't booking 9 bedrooms last minute.
But a couple or a small family or somebody may say, hey, let's go away for the weekend or for a couple of days.
And so, Ann, we always say, though, you should underwrite because what you will find in a lot of markets, you should underwrite multiple bedroom counts in your market because you might not pay a lot extra for a 4 bedroom than a 3 bedroom in your market, but you might get a lot more income on a 4 bedroom than a 3 bedroom. Your return on investment is better. Likewise, you might be in a market that is geared more toward couples or smaller groups. Like Napa Valley is a good example of one of those markets that the big family reunion type properties don't do as well as the 2 and 3 bedrooms or less because that's the people who go and visit. The demographic of the people who visit that area are not the big family reunions because it's wine country, right? Most markets have a lot of crossover. And so that's why it's hard to say one is better than the other.
Yeah.
Sometimes when you're running the numbers, doing your underwriting, you will find that one has a better return than the other. Lots of times there's a lot of crossover. So it comes down to what are your property goals? What is your buying capacity?
Yeah.
What is your furnishing capacity holding, that property and those higher expenses versus the lower expenses? I mean, you can deck out a 1,000 square foot property that's a 2-bed, 2-bath and just deck it out, completely to just an amazing experience for a lot less than you're going to deck out a 9-bedroom property that's 6,000 square feet.
Yeah.
Right. And so those are all things to consider when you're considering small or large.
All right. Last question. And this is from Nick.
Okay.
What phase in the short-term journey is the most difficult?
Oof.
So, there's a lot of phases. There's the acquisition, there's the setup and management, there's the marketing, there's a lot of things. Where do you find most people get frustrated?
Yeah, it's a great question, Nick. And I'm going to break it down to the 3 major phases and the outcomes of each of those phases for those of you listening. We really focus on the acquisition phase, the setup and management phase, and the marketing phase. The outcome of the acquisition phase is finding and identifying the right market and being able to purchase a property that has the potential to get you the return on investment that you're looking for. Okay. Outcome in acquisition phase is basically buying the property. Setup and management phase, the outcome is being able to take that great property and that great market and select a target audience, curate this amazing experience for them, furnish that property to help deliver that experience, and then put management in place, whether it's yourself or somebody else, to deliver that experience to your guests. Yep. That's that middle phase. And then the final phase is marketing. And marketing is the phase where you're saying, okay, I've got this great property. I've got this awesome experience for a target audience. Now, what am I going to do to articulate what I have to offer so that somebody raises their hand and says, I want that property over everything else available to me. Okay. And that's speaking to that guest. So that's the outcome in those those phases. They're all hard, right? They're all going to be tough. You have to spend the time in all of them. Most people will battle through the acquisition phase. And they'll say, okay, I know I've got to buy a property. I can't play the game unless I own a property. So they battle through that. They deal with what it takes to acquire that property. Right. That's a difficult phase. Where I think the next 2 phases become more difficult. And I think the most grueling phase is the setup phase. But I think why the last 2 phases are more difficult is because a lot of people, after they buy the property, they want to rush to throw it on the market and see what they can get, start generating business. And so it's difficult, one, mindset-wise and discipline-wise, to say, I have to finish those last 2 phases.
Because you don't want them to be disappointed when they don't get the bookings
they're going to launch,
they want.
It's going to fall flat, and then you've got to rewind, right? And that's way harder than just going from the very beginning. The setup phase is probably the most grueling and stressful phase because it's short-lived. It's a short-lived phase that is really, really stressful and intense while you're in the middle of it. Mm-hmm. Getting the furnishings, figuring out who your target audience is, creating this unique experience, interviewing all your management partners. It's short-lived because you're in a hurry. You're in a rush to launch this property. But I would say the most stressful phase while you're in it is probably the setup phase. All of them are difficult in their own right and most of it comes down to the discipline to actually do the work necessary in each of those phases. I always talk about simple and easy. People confuse simple and easy. And I talk about this all the time, and I will talk about it forever. We have a very simple process in acquisition. We have a very simple process we follow to curate this great experience in the setup phase. We have a really simple process in our marketing, but none of them are easy. Right. It takes the work and the effort to put in during all of them. All of them are going to be, have their own challenges. But the shortest lived one that is probably the most intense while you're in the middle of it is definitely the setup phase. Yeah.
Follow the process, dive into the blueprint, and just keep your head down. You'll get past it. You'll get through it.
Once you get those marketing assets, which is your photos, being able to visually tell the story of what you have to offer, you're getting a good property in a good area, curating this amazing guest experience, getting those photos. Now you're done. Now you're just skating, right? So then it goes away because you've got everything you need to maximize this asset for the long term. And you're probably going to roll with what you have already set up for the next 3 to 5 years. And now it just becomes that passive investment that you want, that true lifestyle asset. So it's not that any of these phases last forever. They're all short-lived, but you have to dial in each of those phases to succeed, especially nowadays, because right after COVID hit and everything just went through the roof, if you had a property, it was like having toilet paper during COVID. You made money. You didn't have to have more than just a good property in a good area. Now you do have to dial in those other phases. And that's where it becomes difficult, is because people feel like the market changed on them, it didn't really change. We had a blip in the market that allowed you to succeed with one phase of the process complete. Now we have to dial back. When I wrote my book, What the Hell is a Lifestyle Asset? All three of these phases were in there. I wrote that in 2017. I didn't write that based on the blip in the market that we had post-COVID. And now we're back into what it takes to really succeed in the short-term rental game. Once you dial it in, though, that might be a 6-month process from start to finish, going through all three of those phases. And then you've got an asset in your portfolio that has the potential to maximize. The heavy lifting is done because you've already done and put everything you need in place. Great property, great experience, great marketing assets. Now you roll with it for the next, and then you rinse and repeat and you do it again.
Where can they find your book?
Hey, I appreciate it. Call to action. Hey, you are doing good on the questions.
I know.
Job,
what the hell is a lifestyle asset by Shawn Moore?
Go find it on Amazon. You can download it at Vodacy.com. You can get it for free. But yeah, go check it out. It
is. It really is a great book. It dials in the stages and the process, and it's awesome. So if you're looking to get into that, it's a good starter. So well, buddy,
that's it.
I mean, good work today.
Hey, good job on the questions.
Hanging out with my best buddy.
Cheers. You did good questions this time. Good job, buddy. All right, guys, we're going to wrap it up. You guys know at the end of every episode, I leave you with 2 challenges. And if you got any value out of this, I always ask that you like us, share us, leave us a review if you have more than 30 seconds. And those things do help us grow the show, share our message with more people that are interested in chatting about short-term vacation rentals. And finally, that last challenge I have for you today is to pick one thing that you can do to go start building that life you don't want to take a vacation from. Cheers, my friends.
Cheers, buddy.
Cheers, buddy.